So October, November 2019, paper 11. First thing I'm trying to find out the trade receivables amount, the closing trade receivables. So how do you get the closing trade receivable? Opening trade receivable, then the credit sales and amount received and discount allowed. So what is the closing balance that you're going to get? Can you give me this amount? So it will be 327 plus 63,000. So this is 390,000. 390,000. 390,000 minus 324,000 minus 13,500. So 52,500 is your closing trade receivables. What is 2% of this? 1,050. Okay. This would be your closing PDD. 2% of 52,500. So 1,1890 minus 1,050. So you get 840 as income. It has something to do with the discount allowed. So when you were finding your closing trade receivables, you forgot to take your discount allowed. That is why this entire issue arose. So you got wrong closing trade receivables, so wrong PDD.
So how you got discount allowed 13,500?
Just 1 minute. I have received 32,400 after 4% cash discount.
Yeah.
That means 324,000 represents 96. 96 would be after 4% discount. Yeah?
Yeah.
So what would be the 4% discount?
I don't know.
10th month. What is the correct answer for this?
That's A.
Hmm?
It's
What? A.
Yeah, it's A.
Okay. Come on, let's see what is happening. I want to know entry for training that has to be made in the statement of financial position. So I sent a training course. I sent staff for training course, which is costing $100 per person. And 10 staff attended in April and 4 in May. Total cost had to be paid at the start of April and the balance at the end of May. Which entry for training was made in the statement of financial position on 30th April? Okay. Half of the total cost. Come on, let's see. What is the cost for April? 10 into 100. 1,000.
Yeah.
What is the cost for May? 4 into 100, 400. Total is 1,400. Correct? 700 you
Yeah.
have paid in April. Half of the total cost has to be paid at the start of April. So I want to know in the statement of financial position on 30th April, that is for the month of April, how much would go? So for April, what is your expense? What is your expense for April?
1,000.
1,000. How much have you paid for April?
700.
Okay, so what would be outstanding for April?
300.
300. So it would be 300 accrual. Okay. We are doing the 22nd one. Business bought the following units of inventory. 1,200 units were sold on 22nd May for 20 each. The net realizable value of the inventory was $24. There was no opening inventory. What is the value of closing inventory using AFCO method? Okay. Come on, AFCO method, you just have to see what would be your average cost of the inventory. First, let me see how many inventory do you have? 2,800. Correct? Can you give me the total cost of this inventory? This would be 12,000. This would be 14,000. And the third one would be 14.75 into 800. 11,800. Can you give me the total cost of this total inventory? So it is 12,000 plus 14,000 plus 11,800. So it is coming up to 37,800. What is the average cost? Average cost would be 37,800 divided by 2,800. Average cost 37,800 divided by 2,800. So my average cost per unit is 13.5. Are you with me? Are you with
Yes,
me?
Yeah.
Okay. From 2,800 units, you've sold 1,200 units. So what is the balance number of units that you have? 1,600 units. 1,600 units, this is your closing inventory. Cost is 13.5 and NRV is how much? 24. So cost or NRV, whichever was lower. So 13.5 into 1,600. So it is coming 21,600. Is this the answer?
No, it was C.
6C. Are you sure? Are you
Yeah.
sure?
Yeah, I'm sure. I'm looking at it now.
Okay. I know. 22 units were sold on 22nd May. 1,200 units were sold on 22nd May. Yeah, I know my mistake. So I will find the average cost over here. 2,000 units. This is 12,000 and this is 14,000. So this is 26,000. What is the average cost? 26,000 divided by 2,000. It is 13 per unit. So from this 2,000, you've sold 1,200 units. So you're left with how many units? 800 units at an average cost of 13 per unit. Are you with me? Then you bought 800 units at 14.75. So 800 into 13. This is 10,400 and 800 into 14.75. This is 11,800. So you have 1,600 units. And what is the average cost? 11,800 plus 10,400. This is 22,200. See. You with
Can you
me?
explain this again?
Yes. What happened is that we have sold our inventory over here on 22nd May. Okay. So we will first find the average cost of these 2,000 units. The average cost of these 2000 units is first 1000 into 12 is 12,000 and 1000 into 14 is 14,000. So the average cost of 2000 units is 26,000. Are you with me?
Yeah.
Yeah. Now 26,000 divided by 2000, you get the average cost per unit as 13 per unit. We are doing AVCO method, average cost method.
Why are we not taking the average of all of them?
Because I have sold the goods over here. So these goods have gone away. So I'm not taking average of all. I didn't see this date. So now on the 22nd of May, I am left with 800 units at average cost of 13.13 per unit. All the above units have gone away.
Yeah.
And on 28th of May, I have purchased more 800 units at 14.75. So the cost is this. So when I do AVCO method, quantity plus quantity, total quantity, cost plus cost, total cost divided by total quantity will give me average cost or valuation as per AVCO. Are you with me?
Yeah.
Twenty-third. Company has reported profit for the year and they say it is the same whether it uses marginal costing or absorption costing. Profit for the year is the same whether it is using marginal costing or absorption costing. Now the difference in the profits between marginal costing and absorption costing is only and only because of closing inventory. Yes? Are you all with me?
Yeah.
Okay. Profit for the year is the same whether it is using marginal or absorption. The difference in the profits with the two methods can only be because of inventory. So this is not there. Now if inventory will increase, the profit for the year as per marginal costing will, as per absorption costing will also increase and as per marginal will also increase. There will be a difference in the profit, but the profit that is reported is same. That means there is no difference in the profit. That means the inventory has not changed. Inventory has remained the same. That is why there is no difference in profits.
Okay.
If the selling price did not change, that the inventory, even if the inventory changes and the selling price is constant, there will still be a difference in the profit. So the reason why there is a difference in the profit between marginal and absorption is only and only because of
Inventory.
inventory. Yes. Now the 27th one. What is the company's contribution to sales ratio? Total cost minus total fixed costs would give me the variable cost, and the variable cost is 120,000. Are you with me?
Yeah.
Sales, you did the same thing?
Nah, I didn't. I understood my mistake.
Sorry? Minus
made a mistake.
variable cost is
I did.
contribution. What is contribution?
It would be negative, right?
480,000.
Oh, never mind. Yeah.
So, contribution to sales ratio is contribution upon sales into 100. So 480 divided by 600 into 100, it is 80%.
Yeah.
Okay? This was easy.
Yeah, I got it.
Okay,
Yeah, I made a silly mistake.
sorry?
I made a silly mistake, that's all.
Okay. So it is like question number 5, October, November 2019, paper 12. What was the correct total SLCA balance, sales ledger balance? Okay. Company prepared a sales ledger control account. The balance did not agree with the sales ledger balance, and sales ledger balance was 42,650. So it is 42,650. Are you with me?
Yeah.
Sales ledger means customer account. Okay? Irrecoverable debt. In the sales ledger, you maintain customer account. And in general ledger, you maintain the control accounts. Are you with me?
Yeah.
So there was an irrecoverable debts of 500. You did not record it in sales ledger. So you will record it?
Yeah.
Okay. Journal has been incorrectly added and must be reduced by 715. Now sales journal will go in control accounts. Yes?
Yeah.
Okay. SLCA, control accounts, includes discount received of 400. It should have been discount allowed 600. This is SLCA. Yeah?
Yeah.
So I wanted the amount in the sales ledger. So I will just think about sales ledger and the customer. Sales to J. Brown have not been entered in his account. That means in the customer account it has not been entered. Now find the correct amount. 42,650 plus 640 minus 500. So it is 42,790. Is this the correct answer?
Yeah.
Yeah? Okay.